The global financial landscape is undergoing one of its most significant transformations in decades, as countries worldwide challenge the long-standing dominance of the US dollar. Motivated by economic necessity, geopolitical shifts, and a desire for financial sovereignty, nations are rethinking their strategies for global trade and currency reserves. At the center of this seismic shift lies gold, a timeless, tangible asset that is being embraced as the foundation for a new financial order. This growing emphasis on gold is not a coincidence. Over the years, reliance on the US dollar has created vulnerabilities for many nations. These vulnerabilities were starkly highlighted during the administration of President Donald Trump, which adopted an aggressive approach to international trade policies. The administration's threats of imposing up to 100% tariffs on major economies like China and the BRICS nations, Brazil, Russia, India, China, and South Africa, revealed the fragility of a financial system overly dependent on the dollar. In response, these nations began fortifying their economies by turning to gold, not just as a safe haven asset, but as a strategic tool to hedge against dollar volatility, assert economic independence, and pave the way for a more balanced global financial ecosystem. China's strategic pivot to gold, a global game changer. Among the nations embracing gold, China stands out as a trailblazer. As the world's second-largest economy, China has recognized the importance of diversifying its reserves to mitigate the risks associated with a dollar-dominated financial system. By December 2024, the People's Bank of China reported an impressive increase in its gold reserves to 73.2 million troy ounces. This move marked a deliberate and strategic effort to safeguard the nation's economy from global uncertainties. Gold's appeal for China extends far beyond its historical value as a store of wealth. In an increasingly unpredictable world, gold provides economic stability, reduces exposure to currency fluctuations, and offers a hedge against inflation. But for China, the pursuit of gold also has a geopolitical dimension. By reducing its reliance on the US dollar, China is simultaneously positioning the yuan to play a larger role in global finance. This aligns with the country's broader vision of creating a multipolar financial system, one that challenges the dominance of Western institutions and empowers emerging economies. China's aggressive accumulation of gold is further supported by global market conditions. U.S. monetary easing policies and rising demand for safe haven assets have propelled gold prices to historic highs. For China, this represents not just an opportunity to safeguard its economic future, but also a strategic move to reshape the global financial order. BRICS, nations, building financial resilience. Through gold, China is not alone in its pursuit of gold. Across the BRICS bloc, nations are adopting similar strategies to strengthen their economies and reduce reliance on the dollar. Together, these countries are creating a unified front that prioritizes financial independence and resilience. Brazil has significantly increased its gold reserves, reaching 100 metric tons in 2023, a substantial rise from its previous annual average of 80 metric tons. This proactive approach reflects Brazil's commitment to shielding its economy from external shocks and dollar-related risks. As one of Latin America's largest economies, Brazil's actions underscore the global trend toward gold as a stabilizing asset. Russia. Facing extensive Western sanctions and geopolitical isolation, Russia has become one of the world's most aggressive gold purchasers. In 2023 alone, Russia doubled its gold acquisitions to 300 metric tons. These reserves have become a cornerstone of the nation's financial strategy, stabilizing the ruble and reducing reliance on dollar-based trade. By investing in gold, Russia has created a buffer against external pressures, allowing it to maintain economic stability despite global challenges. India's cultural and historical affinity for gold has long influenced its economic strategies. By 2023, the Reserve Bank of India had added 200 metric tons to its gold reserves, reflecting a dual approach that combines financial prudence with cultural values. For India, gold serves as both a safeguard against global economic risks and a symbol of prosperity deeply rooted in its traditions. South Africa. As one of the world's largest gold producers, South Africa has leveraged its natural resources to boost domestic reserves and promote regional cooperation. The nation's emphasis on sustainable mining practices has further enhanced its role in the global gold market. Indonesia. A newer member of the BRICS bloc, Indonesia has embraced the bloc's vision of financial resilience by accelerating its gold acquisitions. In 2024, Bank Indonesia increased its reserves by 60%, reaching 80 metric tons. This move reflects Indonesia's alignment with the broader goals of the BRICS alliance and its commitment to strengthening its financial infrastructure. Together, these nations are forging a path toward a more equitable and diversified global financial system, one where gold serves as a cornerstone of stability and independence. The waning dominance of the US dollar. The US dollar has been the cornerstone of global finance for decades, serving as the world's reserve currency since the 1944 Bretton Woods Agreement. This agreement tied major currencies to the dollar, which was backed by gold, and established the dollar as the primary medium for international trade. Even after the collapse of the Bretton Woods system in the 1970s, the dollar retained its dominance, granting the US significant economic and geopolitical advantages. However, this dominance has come under increasing scrutiny in recent years. The weaponization of the dollar, through sanctions, financial restrictions, and its use as a tool of geopolitical influence, has alienated many countries, prompting them to explore alternatives. Events such as the September 11th attacks and the subsequent US foreign policy decisions highlighted the vulnerabilities of a dollar-centric system. For nations like China, Russia, and Brazil, the accumulation of gold represents a calculated effort to break free from these constraints and assert greater financial sovereignty. As the world becomes more interconnected, the limitations of a dollar-dominated financial system have become increasingly apparent. Emerging economies are demanding a more balanced and inclusive approach, one that reflects the realities of a multipolar world. Gold, with its universal appeal and intrinsic value, has emerged as the ideal asset to support this transition. Gold, the cornerstone of a new financial system. Gold's resurgence in global finance is a testament to its enduring value and versatility. Unlike fiat currencies, gold is a tangible asset that cannot be devalued or manipulated by central banks. This makes it an attractive option for nations seeking to safeguard their economies against inflation, currency volatility, and geopolitical risks. China's gold reserves, which exceeded 2,264 metric tons by the end of 2024, underscore the transformative potential of this precious metal. The rise of gold-backed trade agreements within the BRICS framework further highlights its importance in reshaping the global financial system. These agreements not only reduce reliance on the dollar, but also foster stronger economic partnerships and create a more balanced and inclusive financial landscape. The cultural and strategic significance of gold's appeal extends beyond its financial utility. For many nations, it holds deep cultural and historical significance. In China, gold symbolizes prosperity, stability, and wealth, values deeply ingrained in the nation's social and economic fabric. This cultural affinity is reflected in the People's Bank of China's aggressive gold acquisition strategy, which saw annual purchases increase from 250 metric tons in 2018 to over 550 metric tons by 2023. Similarly, India's relationship with gold is deeply rooted in its cultural heritage. From religious ceremonies to weddings, gold is an integral part of Indian society. By increasing its gold reserves, India is not only safeguarding its economy, but also preserving its cultural identity. Strategically, gold offers unparalleled advantages. It serves as a hedge against inflation, stabilizes economies during crises, and provides a reliable store of value. In an era of global uncertainty, these qualities make gold an indispensable asset for nations navigating the complexities of modern finance. What lies ahead? A golden future. The global trend of gold accumulation is set to continue, with analysts predicting that China's annual purchases could exceed 600 metric tons by 2025. Other BRICS nations are expected to follow suit, further consolidating their positions in the global financial system. Technological advancements in gold mining, trading, and sustainability will play a critical role in meeting this rising demand, while innovations in blockchain technology could revolutionize the gold market by enhancing transparency and security. As the world transitions to a more diversified financial system, gold will remain at the center of this transformation. Its ability to provide stability, resilience, and independence makes it a cornerstone of the new global economy. Conclusion. The rising influence of gold represents a transformative moment in the history of global finance. From China's strategic investments to the unified efforts of the BRICS nations, gold has emerged as a powerful tool for achieving financial stability, independence, and resilience. As the world moves toward a multipolar economic order, the role of gold will only grow in significance. This shift is not just about economics, it's about redefining global power dynamics, creating a more balanced financial system, and shaping the future of international trade and cooperation. The era of dollar hegemony is giving way to a golden age, and the implications for the global economy are profound. Thank you for watching. If you enjoyed this analysis, please like, share, and subscribe for more insights into global finance and economics. Share your thoughts in the comments, and we look forward to seeing you in the next video.